Investors want to know how much money they may gain from investing in Tesla because it has been a prominent automaker for a while. Some market variables can influence how much a stock may be worth in the future. However, this is never guaranteed. Hey guys, glad to see you back. Tesla stock. Tesla is arguably a unique company. The electric vehicle manufacturer has experienced tremendous growth in recent years and is still performing admirably. The company's stock has topped the chart numerous times in recent months, and there is still much to come that could cause the stock price to soar in the near future. We're about to find out how much this car company will actually be worth in 2026, based on Tesla's current and future growth potential, as well as his past performance. Tesla has also received a number of price targets from Tesla stock investors and analysis, the majority of which have been bullish. Additionally, Tesla stock has been rated by many investors as a strong buy. Both bullish and bearish price predictions have been made for the Tesla stock in the past, but just like any stock, Tesla's price performance in the future will be heavily influenced by its current and future market potential of the business and, to a large extent, by its past records. In that regard, Tesla has been doing pretty well for itself. The EV company reported revenues of $18.8 billion in the year before last. Deliveries of Tesla vehicles went up by around 81%. It is consequently inevitable to expect something greater from the EVMA, now that we know a little bit about Tesla's prior accomplishments despite the growing competition in the EV business. To determine how much Tesla will be valued in 4 years, let's look at the company's shares and what it might be worth then. Let's look at how they performed over the last 4 years. Tesla reported an average growth rate of 69 in car deliveries between 2016 and 2021. Let's assume that in 2026, this falls to around 50. Considering that Tesla produced 936 cars in 2021 and 1,444 vehicles in 2022, that's a relatively remote possibility. But Tesla could theoretically create roughly 1,177,750 vehicles this year. By dividing this amount by the typical price of a Tesla car, which is currently estimated to be around $50,000, Tesla would generate a staggering $355 billion, $387,050,000 in income in 2026. We anticipate that inflation will drop and that Tesla will be able to generate these car prices by lowering the cost and setting Tesla's operating margin to 20%, even if the average cost of a Tesla car is currently somewhat higher than the number mentioned here. Divided by Tesla's $1.4 billion in outstanding shares, its operating income could be as high as $71 million. The automaker will have an earnings per share value of 71, and at the time of this video, Tesla's P ratio is 97.68, and its forward P ratio is 46.08. If Tesla reaches this price by 2026, how much will you make? Let us know in the comments below. If you haven't done so already, don't forget to like, subscribe, and turn on notifications so you don't miss out on whenever we post a new video every week. There are a number of market factors that could potentially cause Tesla stock to reach this price. Tesla is undoubtedly performing well based on its current production outputs and income throughout its various markets, but the automaker may need to exert a little bit more effort to meet this pricing objective, particularly with regard to the manufacturing of cars in its giga plants. Tesla currently operates 6 of these factories, with locations in China, Germany, and the US. More are on the way as the automaker continues to build factories all over the world in an effort to drastically increase productivity and transform energy usage. This is true even though some of these facilities are experiencing production issues, particularly Tesla's Shanghai plant, which has experienced significant challenges with car deliveries. Musk has intimated that Tesla would be seeking to develop another gigafactory in Canada as it continues to spend in boosting output across these factories. At Tesla's annual shareholder gathering earlier this year, the firm's CEO shared this knowledge, while he had before jokingly remarked that we do believe, like many Tesla bulls, that this milestone can be attained if the company so desires. Not only that, but Musk also stated earlier in August that Tesla is likely to construct at least 10 to 12 additional gigafactories over the next few years. Musk had previously stated that Tesla aimed to produce 20 million electric vehicles by 2030. He stated that each of these facilities will need to produce between 1.5 million and 2 million cars in order to do this. Undoubtedly, this is a lofty goal, but Elon Musk has previously set production goals for the year, so it is a tuned ball. Elon Musk, the CEO of Tesla, stated that the firm intended to build 500,000 vehicles by 2020, which it did. If Tesla is indeed moving towards the 20 million vehicle goal by 2030, the company should have a sizable number of vehicles produced by 2026. Even though it would take Tesla another 4 years to actually create 20 million cars, it would have done so by 2026. Aside from constructing new gigafactories, this might further drive up the stock price, although it hasn't yet. Achieve the company's goal of producing 5,000 vehicles per week. We believe these are just baby steps, and the moment when Tesla becomes an almost unstoppable monster in the solar industry is just around the corner. The company's Shanghai plant recently passed the 1 million cars produced milestone, and the Texas plant produces 1,000 vehicles in a week. The electric vehicle industry is undoubtedly growing, with new businesses entering the market all the time. But given that Tesla dominates the market, none of these automakers even come close to competing with them. Tesla has experienced phenomenal growth and profit margins in recent years, and it has achieved milestones that other automakers will need years to match. Because of this, it's easy to see why things are going well for them right now. Additionally, Tesla ranks first in terms of customer service, which makes owning a Tesla much more interesting. Tesla is nowhere near losing its position as the top electric car manufacturer in the world, and if anything, it's likely to continue dominating the market despite the growing number of electric car makers. If Tesla can continue to ramp up production in its factories and as well eliminate delay factors in its car delivery, it could potentially reach the estimated stock price value. Judging by Tesla's past records, it's fair to believe that the company will keep up with this growth for the next 4 years. It's done so in the past, and it will do it again. And remember, this is just the amount that Tesla will make from its car business. We don't know too much about its batteries and solar panels, but there's a lot of revenue to be made if Tesla steps up its game. Also, we didn't take into account Tesla's robo-taxis AFES businesses and all the things that it can use to rake an enormous profit for the automaker. Likewise, we use a 50 gross rate value for Tesla in this video, which is somewhat lower than what is expected from the car company, judging by how tremendous its growth has been in the past. This is something that Tesla has done in the past, and we think it can do it again, or even more so. Expect more total revenue, and by extension the stock price estimate may be even higher by 2026. Given Tesla's current and future market potential, investors may be anticipating a significant return on their investments. However, keep your fingers crossed. We wouldn't be surprised if the forecasted stock value occurs much sooner than anticipated. What do you think about Tesla's price objective? Can it accomplish this goal in 2026, and do you believe it's overpriced? Let us know in the comments section, and while you're here, click on the video to the right to see what Tesla has been up to recently.